Hello, everyone. Good morning to you and happy new month to everyone in the house. And first of all, let me apologize for coming in late as I had to visit the doctor this morning as regards to my throat. And I'm glad that things are getting a little bit better. I've been taking lots of hot drinks in the last 24 hours or so, and on medication too as well. So I think things are getting better with my voice now, and I think we should be able to have a better experience this morning. And thank you to everyone who has showed a lot of concern as regards to my health via all my DMs and everything. Thank you very much. I really do appreciate you. It's another day. It's the first trading day of the month of August, and in fact, we've had an interesting 24 hours so far this week, as we saw significant price movement on especially the US oil, and then we saw how the the US dollar lost some momentum yesterday. It was more of a risk averse, but finally we begin to see some momentum in favor of the US dollar in the last 6-7 hours in the market. So we are going to be reviewing all this and also take into consideration the fact that today is the first trading day of the week, of the month rather. And so that's what we're going to be doing today. And I've already done conducted a comprehensive price action analysis on the financial instrument on our watch list. And of course, for those who are with me on both my TradingView and Telegram platform, you definitely have gotten an update in that regard. And we are also going to be expatiating on these commentaries I shared on the public platforms. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to come together as a community in anticipation of both the London and the New York session. And during this time, we normally review how well our positions are doing, manage our existing position, and at the same time, position ourselves strategically ahead of this trading session. Basically, what we do here is a follow-up detail of the videos I shared during the course of the weekend. So every week like this, I normally have 4 financial assets that is on our watch list, and we have the USDJPY, the GBPUSD, XAUUSD, and of course the USOIL SPOT. So we normally do a follow-up detail on this one, and if you had not watched my video on this on the analysis on these assets, I would implore that you check them. I have the link in the description box of this current video, so you can check them out and see what I'm talking about, and also have a background knowledge of how we got to this point we are in the market right now. And in fact, they are duly timestamped, so you can easily navigate to whichever chapter of that video is of your interest. So with that being said here, let's dive right into the business. But before we do, I would like to confirm that the sound quality and the visuals are very, very good. So please let me know in the comment section if you can hear me clearly without distortion. And of course, if the video is not freezing at all, please let me know. Your feedbacks are valuable to me, as it will help me to ensure that you are having a better experience out there. So thank you very much as you do so. I see your comment, Dominion Site Office. Good morning to you, Dominion. Happy new month, and trust you are doing very well this morning. It's been a while I saw you. Trust you are doing well. All right, so with that being said, you know how we do it. The first thing we are going to be doing this morning is to check on the economic calendar. As you all know, we want to keep tabs with these fundamental factors, as they often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And with this information, we can easily position ourselves in such a way that we can catch potential trading opportunities prior, during, and even after this event. So we normally focus on high impact event coming in from the US, Japanese, and the UK economic docket. So for today, August 1st, that is Tuesday, we only have one high impact event, which of course is coming in from the US economic docket, and this is the ISM manufacturing PMI. And the ISM manufacturing PMI is normally released by the Institute for Supply Management, and it shows us the business condition in the US manufacturing sector. It is a very significant indicator of overall economic situation in the US, and of course a result above 50 is seen as something positive for the US dollar, while anything lower than 50 is seen as negative for the US dollar. Now, if we look at the previous data here, we have 46, which of course is not too good at all since it's still below the 50 mark. 50 mark we expect as a sign that the US economy is expanding. And now we have an economics projection of 46.8, which is not on the good side, that is. So we are expecting, there's majority are thinking that there has been a contraction in the manufacturing sector. So we are going to be looking forward to what the actual data is going to be like for today. Will it be just as expected, below expectation, or even beyond expectation? And of course, you know how we do it here. What we want to do is to sniff into the market structure to identify patterns and structures that will give us an insight into what is likely going to be happening during and even after the event. So this event is coming up in about, let's see, about 4 or 5 hours from now. So we also want to anticipate that, ensure all our positions are well secured, as there is a tendency for volatility to come into the market as a result of this event. So with that being said here, let's dive right into the business. I see some comments here. Dominion just confirmed that it's okay. Thank you very much, Dominion. Mansour says, okay, good morning, Mansour. Trust you are doing very well. I'm so excited to have you around. Richard, thank you very much. I really appreciate your concern. My doctor did told me that I should I talk less so that it can heal better. And I'll try to talk a little bit less and wrap up quickly, but ensure that I expatiate things a little bit better so that we can all be on the same page as we prepare for both the London and the New York session today. So thank you very much, Richard. I really appreciate that. So let's dive right into the business for today. So as usual, the first asset we are going to be taking is of course going to be the USOIL SPOT, of course. And in fact, it has been a tremendous 24 hours for us on the USOIL SPOT so far this week. The week started on a very positive note as we were able to take advantage of that bullish momentum we projected during our live session yesterday. And if you remember, at the beginning of the week, if you had watched my video on the USOIL SPOT, you would recollect that I emphasized the importance of that key level at the $80 mark, which of course we said we are going to be using to guide our trading activity for this week. Now let me show you where the key level is. So if I zoom out a little bit, you will see how that key level had been a major determinant of price action throughout the last week of the month of July. You will see how it was initially a strong selling niche before price action finally broke out of that level on Friday, and since that moment we've seen price climb to the upside. And you know how we do it in this community when we have key levels identified like this and price action remains above that key level. Of course, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, with the situation we have here on the USOIL SPOT, at the beginning of the week, we noticed our price action was initially confined between the $80.20 level and, of course, the $79.93 level to give us a flat channel to work with. And you know how we do it in this community. When we have a flat channel like this, we want to wait patiently for the market to give us a signal, which of course will come in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with this situation here, and coupled with the fact that price remains above our key level at the $80 mark, we had no other choice than to look out for buying opportunities if price action broke out and retested the $80.20 level, which of course did, and since that moment we have been buying the USOIL SPOT. We also added more position to our existing trade. As you will see, we added one more position here at the breakout of the $80.50 level, which of course we identified yesterday, and I told us we should be getting ready to capitalize on that one. Then we also had the breakout of the $81 level 2 as well, and then also the $81.40 area. So it was quite a very, very interesting and profitable trade for everyone in the house yesterday. And for those who took advantage of this opportunity, well done to you for being on standby to have caught that move. Now, with this situation here, we must have been taken out of the position because yesterday I moved all my stop losses to around that $81.40 area. And of course, price action took us out of that position with a reasonable amount of price. I think we had about over 200 pips on that single move. Now, this morning, how are we going to be anticipating the New York and the London session today? What is our plans? How do we intend to capitalize on any potential move for today? So before I go into the details here, I want us to run through my commentary as regards to how we are going to be managing our position on the USOIL spot. So for those who are with me on my trading view and the Telegram platform, you will definitely have gotten this update. But if you are not, well, let's run through it together and see what our plans is going to be like for today. So right here this morning, I said that our trades has been closed manually. The week started off strong with a remarkable gain of over 200 pips, fueled by bullish momentum from the previous day. However, the recent surge has met some resistance around the $81.40 and the $81.75 range, indicating potential selling pressure emerging. This could potentially lead to profit-taking activities, suggesting a short-term downtrend at the breakdown retest of the $81 mark, or consider waiting for the retracement to conclude before assessing the possibility of an uptrend continuation. So now let's go back into the chart and let's see what I was talking about here. So after trying to dissect what could be happening this morning, this was what we were able to see. We noticed that as soon as price action got into that $81.75 level, we saw selling pressure resume around that area. And in fact, it was a sign that we might likely be seeing a bearish move, as we saw price was unable to find new highs, giving us a clue that sellers are likely coming in. And look at what happened here. Price dropped again into the $81.40 level, and since in the last 1, 2, 3, 4, 5, 6, 7 hours, price has remained below the $81.40 level to emphasize the presence of sellers around this area. Now, for me, this is a clear sign that we might likely be seeing a counter trend opportunity where price action could break down that $81 mark to incite a retracement move. It has been very bullish, of course, and if anything like selling opportunity comes in here, it's more or less going to be a counter trend opportunity. Now, if you are not a counter trend trader, it is most reasonable that you want to hold on and see how far that retracement phase will go, where we want to anticipate and position ourselves for a trend continuation. Now, if you look at the structure closely, you will see that it's looking as if price action is transitioning into what looks like a reversal pattern. It's looking something like a head and shoulder pattern, which is yet to fully mature, of course, where the $81 level could serve as a neckline of that reversal pattern. Now, for us to consider, that is for counter trend traders, of course, to consider selling the USOIL spot today, you would need price to break down that $81 first of all, break down that structure, then a retest will now confirm that sellers might likely be pushing price a little bit to the downside. And if this happens, there are two trend lines here. Remember, if you had watched my video on the USOIL spot, remember we had two trend lines identified on the 4 hours time frame. The first one is this one right here, and then the second one is this one right here. So if price action will drop, then we want to see how far it's going to drop before the second wave of the bullish momentum will happen. So as soon as price action gets into those trend lines, the next thing we want to be doing is to move all stop losses to secure the sell position while we wait and see how the market will react to this level. So if we start seeing buy pressure resume around that area, then we will have no choice than to join an uptrend continuation. The same thing with this area too. If it comes to as far as this area, if we see buy pressure, something like a reversal pattern, double top, double bottom, head and shoulder patterns, then we want to be joining an uptrend continuation. So let's see if the market will break down the $81 mark, and if it does, then we want to see how far that retracement phase will go before the second wave of the bullish momentum will happen. Then one more thing I would like to state here is that the OPEC Plus meeting is coming up on Friday, and there's going to be a lot of anticipation to that meeting. And I'm of the opinion that there could still be more cut in oil production to further artificially increase the demand of oil prices, which of course the OPEC Plus members have been working on ensuring that oil prices remain around the $80 mark, at least $80 mark, and using the $80 mark as a platform for new highs. Now, if price action does not drop below the $81 level, and instead price continues to climb to the upside, and of course we want to be on standby to catch that move. Now, what I'm going to be doing here, since we have been noticing lower highs here since the let me see here, since the later part of the New York session, we of course want to connect the series of lower highs so that we can have a trend line to work with for today. So I want to reduce this, and then we should thicken this a little bit so that we can see things more clearly and emphasize how important this trend line is. So I would like to give it the red color. Okay, so all right, so we have this. So we are going to do some little readjustments when we bring back our candle chart. So we should have something like this. So going into the New York and London session today, we have a trend line, which of course we are going to be using to guide our trading activities for today. So what this simply means is that as long as price remains below this trend line, we have no business buying the USOIL spot. So we look out for patterns and structures that will support the counter trend opportunity. But if price action breaks out of this trend line, then at this point I'm of the opinion that an uptrend continuation is gradually emerging. So if that is going to be the case, we are going to be looking out for buying opportunities above the $81.40 level to join an uptrend continuation. So we want to be marking that level out on our chart, as we will be using that level as a yardstick to guide an uptrend continuation here. So for those who are profitable, you can afford to have your buy stop order above the $81.40 level, leveraging on the profits you have made so far this week, having your stop loss anywhere around or below the $81 area, which will dovetail to about 35 to 40 pips stop loss thereabout, and let's see how far this momentum is going to go. So that is my view here on the USOIL spot. Very simple setup identified here. We have the trend line, and then we have the $81.40 level, which we are going to be using to capitalize on the bullish momentum, and we have the $81 mark, which we are going to be using to capitalize on a bearish momentum. So if you do have any questions whatsoever as regards to the current market setup or the explanation I made, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can use that time to mark out these levels on your charts, as you will be needing them as a reference point to guide your trading activities for today. I just saw a comment from Mansur Ul Hassan saying that he has a dilemma holding on to his profit for so long. Well, this is a psychological problem, really. And the reason why, if you look at it deeply, the reason why you cannot hold on to your profit is simply because you are doubting your setup, you are doubting your strategy. And probably you are thinking that you are in the game for a short term. And if you are seeing yourself in the game for a long term, there is no reason why you want to close your position. For me personally, I'll always try to close my position, as in move my stop loss to my entry point, where even if price action moves over 50, 60, 70 pips thereabout, I still consider it not as a profit yet. I want to see price action break out of my structures. Now, the only way you can transcend this dilemma is for you to mark out levels on your chart. Now, for instance, if you look at this current chart we are in right now, let me use this as an example for this case scenario. Now, for instance, if you are saying you are going to be buying above the $81.40 level, let's say you have a buy stop order above this area, and you have your stop loss sitting just somewhere right below the $81 mark. Now, once price action triggers your buy position, most people always feel scared or skeptical about it and continue to stay on the chart. So most of the time I tell you, get away from the chart, leave the chart and go away. If you really do have your stop loss in place and you've already decided that you are going to be risking a percentage of your portfolio side, then let it be. If your position takes out in a stop loss, then let it be. It's okay. You still have another day to trade and make some profit off the market. So that is why it's important that whatever risk you are taking on your account should be something that your emotions can handle. So that is why you see some people advise that you use a 1% risk on your account size or a 0.5% risk. You need to understand your temperament and how what you feel comfortable with. That if you lose this, are you going to be feeling okay? Now, if you are worried that if you enter a position that you might be taking out in a loss, then there is something wrong with your risk management strategy. So that means you are risking something that is beyond what you can handle. So if you are risking, let's say, 0.5% of your account or a 1% of your account, then you should be fine even if price action goes the other way. So it's very important that you have this in mind. So you can't say you want to make all the profit on just one single trade. So you want to extend your expectations over a series of trades, which could extend into more than a month, 2 months, 3 months, thereabout, depending on your strategy. So in order to be able to get over this, you want to first of all look at your risk management. How much are you risking per trade? Are you risking something that your emotions cannot handle? If that is the case, that is a red flag. Then you see that you're always worried when positions move in your favor and you quickly want to close that trade. Then secondly, you want to mark out key levels. Before you enter the trade, you want to mark out key levels and state here that, okay, fine, when price gets to this level, I want to move my stop loss to this level and take my highs off the trade. So I hope this helped. If it doesn't, you can contact me personally and we can talk about this in detail. I hope I answered your question, Mansur. If I don't, let me know. And if you need something more, we can talk one-on-one by contacting me, sending me a private DM on that one. So in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving right into the next instrument for today. So the next financial asset on our watch list for today is, of course, the GBPUSD. And unfortunately, the GBPUSD, I had a couple of losses on this position yesterday as I positioned myself above the 1.28600 area to capitalize on that bullish move. But as you will see, price action did not last long there as it moved about 12 pips thereabout before being taken out of that position at both scenarios. So it was a stop loss for me on that one. I'm very sure some of us will have had stop losses too if you are taking advantage of that buy position. But it's okay. The week is still very early, and I'm of the opinion that we still have more chances that will evolve along the line as we get closer to this midweek of this month. Now we saw price action break down the 1.28450, and for those who took advantage of that opportunity, you would currently be running with over 18 pips in profit at this point in time. So like I said in my commentary this morning, you want to be moving your stop losses to secure that current sell position. Personally, for me, the entry point seems most appropriate here. Like I was trying to explain to Mansour the other time, in this kind of scenario, my stop loss will be here, as this 18 pips that I see here is not considered to be as a profit that I want to hold on to. So it's just a way for me to hold on and see how the market will play out. So this 18 pips that we have right here is really not a profit at all for me to bank on, unless we have a further breakdown of the next support line. Then at this point, I want to be considered, okay, fine, I think I'm having something in the banks to call my own. So now, before we go into the details of how we are going to be managing this, let me run through what my commentary is on the GBPUSD this morning. For those who are with me on my TradingView and Telegram platform, you will definitely have gotten an update in that regard. So let's run through this commentary this morning. So I said here that following the buy trigger at the 1.286 level yesterday, there were a couple of stop losses triggered before the price eventually moved below the 1.28450, prompting a sell position. As a new wave of buy pressure emerges around the 1.28150, it is crucial to maintain a secure sell position. Of course, you did want to move your stop loss right now, considering that the price remains within an accumulation zone identified in the video. So for those who have watched my video on the GBPUSD, you will understand what I'm talking about here. And if you haven't, you can check the link in the description box of this current video. So cautionary measures should be exercised. Despite the recent bearish momentum, the potential for a bullish momentum still remains noteworthy. We will delve into this, of course, during the live session today. So this is the setup we have right now, and let's go back into the live chat. Now we can see that price action has finally broke down the support line of that range we identified at the beginning of the week. Now the question here is that, will this sell momentum continue? That is, price action will continue to find lower lows and lower highs? That is a very, very sensitive question to ask at this point in time. That is if you consider the situation we are in right now. Remember that I made mention that we are within a very strong accumulation zone. Let me scale up a bit into the 4 hours time frame for the sake of those who had not watched my video. So if I zoom out a little bit, looking at the 4 hours time frame, you will see that we are currently within a very, very strong accumulation phase. As you will see that every attempt by the sellers to break through to the downside of this zone has been met with strong resistance from the buyers. Look at what happened here. We saw buy pressure resume. We saw buy pressure again resume around this area. And on the last trading day of last week, we saw another wave of buy pressure resume around this area. What this simply tells us is that sellers are finding it very difficult to break through that structure. And with this kind of scenario, it makes a whole lot of sense to buy anywhere above the accumulation zone. And for us to sell, we would need price action to slice through the zone, taking out all the buy positions within this area to give us a comfort that truly we are going to be selling the GBPUSD. But at this point in time, even before the breakdown could happen, we could still manage to capitalize on a potential move by selling even before the breakdown happens, if we can identify and see a significant structure that supports a bearish move. Now, with the situation we have here, we want to see how the market has been reacting to our key level at the 1.28500 area. You know, if you had watched my video on the GBPUSD, I emphasized that this key level is going to be our yardstick for this week. And what this simply means is that if price action remains below the key level, we want to be looking out for patterns and structures that will support the idea of selling this asset. Now, with this information we have on the 4 hours time frame, let's scale back down into the 1 hour time frame and see what I'm talking about here. Now, scaling back down into the 1 hour time frame, you will see that price action broke down. We're still within that accumulation zone. Remember, price action broke down the 1.28450, which happens to be the first support line for the week, as you will see here. And since breakdown happened, we noticed that buy pressure again resumed around the 1.28150, which happens to be the lowest point price action has been for this week. Now, if this selling pressure is really going to stay, then we want to see another breakdown of the 1.28150 to now give us a sign that sellers might likely be taking over this market. So the breakdown of the 1.28150 is going to be another opportunity for us to capitalize and maximize the potential of this bearish move. Now, if price action now goes on to break down the ascending trend line, remember we have this ascending trend line identified on the higher time frame. If you are watching my video on the GBPUSD, you will remember that we have an ascending trend line here, which of course we want to see how the market will be reacting to that structure if it goes any further to that level. Now, if a further breakdown of the ascending trend line happens, of course, we want to be looking out for more opportunities to sell. But if price action gets into that area and we begin to see buy pressure resume around this area, then definitely we want to be getting ready for another wave of bullish momentum. So this is how we are going to be selling the GBPUSD for today. So we have the 1.28150 to use to capitalize on more selling opportunities in this market. Now, with the idea of selling in place right now, you know how we do it in this community. In as much as we're looking out for selling opportunities, we also want to consider the potentials the buyers also have. Considering the fact that we are within a very strong demand zone, which of course we identified earlier on the 4 hours time frame, and coupled with the continued buy pressure we have been noticing around this area in the last 8 hours now, it is quite obvious that buyers could still take over this market. Now, if we are going to be positioning ourselves for buying opportunities here, how do we intend to do that? Now, the first thing I want to do here is to take into consideration what has been happening here since last week Friday. And if you look at the structure closely, you will see that since last week Friday, price action has been finding lower highs. So I want to connect the series of lower highs here to give me a trend line to work with for today. So in fact, we are going to be having a couple of trend lines here. So we have the first one here, and then we have the second one here. So this one, I want to make it a little bit lighter, as this will be the major trend line. The thick one will be the major trend line, while the light one here will be the temporary trend line. Now, with this trend line in place, you know how we do it. As long as price remains below the trend line, we of course want to continue to sell or look out for patterns that will support the idea of selling these assets. Now, if price action breaks out of these trend lines, then it's going to be a sign that we are likely going to be seeing a bullish momentum. Now, one thing I want us to see here is this. Now, following this impulsive move that brought price into the 1.28150 with a continued rejection of the 1.28150, we could have a situation where price could transition into a reversal pattern. It's still a potential reversal pattern. It's not yet confirmed yet. But if price breaks down the 1.28150, then this reversal pattern will be negated. But if the 1.28150 continues to hold by pressure, then we could have a potential reversal pattern gradually unfold before our highs. Now you know how we do it. Whenever we have a potential reversal pattern unfolding, the next thing we want to be doing is to identify a neckline of that pattern, which of course we are going to be using to validate and confirm that we now have a reversal pattern. Now, looking at the structure here, we have a neckline should sit somewhere around the 1.28350, or let's put it at around the 1.28340 here. I want to capture the previous lows, so we have something like this. So I will be giving this a different color to emphasize that this is our neckline for the structure. So we want to label this area. So we have 1.28340 marked out on our chart, 1.28340 level marked out. I'll give this a wine color. So if we're going to see price break out of that neckline at the 1.28340, then it would have broken out of this first descending trend line that we identified here, giving us a sign that we might likely be seeing a reversal pattern. So once we notice that price action has broken out of the structure, we want to wait for confirmation truly. You remember, this is looking like a lower lows, lower highs kind of setup, which supports the idea of selling. So we can't just jump into a buy position because price action broke out of the 1.28340. So we want to see confirmations happen. So as soon as we have the breakout of that line, we scale down into our lower time frame to look out for patterns like a retest of the structure, giving us continued buy pressure around this area. Then we can join an uptrend continuation, which will fall in line with that expectation as price remains within that accumulation zone we identified on the higher time frame. So that is how we are going to be buying the GBPUSD today. So we have a level situated at the 1.28340, which of course shares a beautiful confluence with both the descending trend line we just identified here. So if we are going to be buying the 1.28340, it's going to be our yardstick to guide buying opportunities. And we have the 1.28150, which will be guiding any selling opportunities in this particular market. So if you have any questions regarding what I've just explained, let me know in the comment section, and I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions. And as well, you can use that time to mark out this level, as you will be needing it as a reference point to guide your trading activities for today. All right, I see your comment, Mansour. Okay, I'm glad you found it helpful. You're welcome. If you still have anything, you can still contact me, and I'm here and willing to be of help in that regard. So in the absence of no questions, I want to assume that we're all on the same page. So we shall be moving right into the next instrument on our watch list. So the next financial asset on our watch list for today is the XAUUSD, my favorite asset amongst all the assets I normally take on for every week. Last 24 hours was quite an interesting situation for us here in this community, as we took advantage of a very interesting buy position after the breakout of the $1,956.50 level yesterday morning. Now, before we go into the details, let me run through how the week started for us. Remember, we saw how price action started the week on a very strong bearish note, as we saw price started the week at around the $1,960.40 level, and we saw price drop significantly into the $1,953.40 level, giving us something like this range we saw here. As you will see, we had a range like this, giving us a range. However, one thing we observed during our live session yesterday was the fact that as soon as price got into that $1,953.40 level, we saw buy pressure resume around that area, which lasted about 6 to 7 hours or so, giving us a clue that sellers are finding it difficult to break through that level. And coupled with the fact that that level also shares a confluence with the ascending trend line we identified earlier. Remember, we had this ascending trend line, which we said we were going to be using to guide our trading activity. And of course, as long as price action remains above the ascending trend line, we have no business selling an asset. So we, of course, if price remains above the ascending trend line, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, with this continued buy pressure around this area, which of course shares a confluence with that ascending trend line, I told us all that we are going to be anticipating a bullish momentum if price action breaks out of that $1,956.50 level, which of course, after the breakout happens and price action continues to climb, we want to be maximizing the potential of that bullish move by adding more positions at the breakout of the $1,960.40 level. And it was just as we projected here, as price action continued to find new highs, as we saw price action continue to jump up into the 1,972. And I do hope you moved your stop losses accordingly. If you had done that, you must have been taken out with a minimum of 150 pips on this position before this bearish momentum began. So personally, I missed out on this bearish momentum because I was looking at it as a potential retracement move of the bullish momentum that started this week. So for those who took advantage of these opportunities, well done to you for being on standby to catch this move. Now, as we prepare for the New York and the London session today, what is going to be our plans? How do we intend to capitalize on any potential move that is likely going to come up today? Now, to do this, before we go into that detail, let's run through my commentary on our public platform. So for those who are with me on the TradingView and Telegram platform, you will definitely have gotten this update and you are familiar with what we talked about here. But for those who are not, let's run through this quickly together and let's see how we said we are going to be managing this trade. So I said here that the week commenced with a robust bullish momentum, enabling us to secure a profit of over 150 pips. However, the market experienced a wave of selling pressure as traders seek refuge in the US dollar ahead of the release of important data such as the ISM manufacturing PMI and JOLTS job openings from the US. The US dollar seems to be gaining strength in the current risk-averse market environment. It is noteworthy that the price has retraced back into the zone where buy position was triggered yesterday. As a result, it is essential to exercise patience and observe how the market responds to this confluence of factors for potential signals. So now we are at a very crucial moment in the market where price action is back into that zone where we bought the market yesterday. Now look at what we have here. Let me zoom this out a little bit so that we can see things clearly. So you will see that this is where we bought the XAUUSD yesterday. Remember, around the $1,956.50 level, making that area an area that has a memory for buying power. Now, with the situation we have right now, price action is back into that zone. And for the fact that price is back into that zone, we want to be very, very careful because the memory around that area, we are all psychological beings. And because of the memory around that area, there is a tendency for people or participants in the market to want to buy again around that area. So what we are going to be looking out for here is to see how the market is going to transition, how price action will transition around this area. What pattern will it form? Is it going to form a reversal pattern or a trend continuation pattern? Now, coupled with that expectation here is this ascending trend line we identified yesterday. In fact, I want to adjust it so that it can capture all the previous lows here. So you see, we have a pivot low here. We have one here. We have another one here that was yesterday. And right now, price is back into that trend line here again. So you can see how important this structure is at this point in time. So now if we begin to see buy pressure resume around this area, then we will have no other choice than to get ready for another wave of bullish momentum. However, if price action drops below the ascending trend line with a retest of structure to confirm, then we'll have a choice than to sell the XAUUSD for today. So we are going to keep this in mind while we continue to monitor price action. So our center of focus for today is around the 1,956 level. I'm yet to find the pattern here at this point in time to guide our momentum. So let's see what happens. For those who are profitable so far this week, you can afford to have your buy stop order above the 1,956, hoping that price action will climb up again from that area. Then you have your stop loss. Very, very important to have your stop losses just right below the 1,953. You need to give enough room for volatility could happen to take you out. So give enough room to see price action breathe. So that stop loss should be around 35 to 40 pips thereabout, and let's see how the market will play out. And if price action continues to climb and find new highs, then we have the $1,960.40 level, an area to look out for more buying opportunities in this market. And if there are new setups, of course, I will be giving you updates in the comment section of both my TradingView and Telegram platform. But if price action drops and we have a retest of the trend line, then we could sell even before the breakdown of the $1,953 level happens to join a bearish move. So this setup here gives us a beautiful confluence where the potentials of sellers and buyers cannot be ignored at this point. So let's remain patient and see how the market will react. But for me personally, I'm leveraging on the profit I've made so far this week to test what is around the 1,956 to see if this is going to click for me for today. So let's see how this will play out. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next instrument. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the last instrument on our watch list for today. So the last instrument on our watch list for today is the USDJPY. And in fact, we have been profitable on the USDJPY. Currently, price action is running with over 90 pips in profit at this point in time as price action remained consolidating between the 142.850 and the 142.500. Now, let's run through how the market started this week, what incited the idea of buying this asset. So at the beginning of the week, we saw our price action was within a range that was between the 141.150 and the 140.700, just right around our key level at the 141.00 area. And you know how we do it whenever we have this kind of consolidation phase. Of course, we want to wait for breakout or breakdown of the range to give us an opportunity to either buy or sell. And the fact that price action remains above our key level, which of course is sitting at the 141.00 level, we want to be looking out for patterns and structures that will guide the idea of buying. Now, with the situation we have, remember I told us all yesterday that I missed out on this opportunity as I was fast asleep at that time in this part of the world, as if we had been around we would have taken advantage of that move. And for those who took advantage of that move, well done to you for being on standby to catch that move. But during our live session yesterday, this was where we were. During our live session, we were around this area. And I made mention that a breakout retest of the structure will be what we are looking out for to join an uptrend continuation. Then a further breakout of the 142.500 will welcome more opportunities. So we have two positions running basically on this current market structure. And this morning, while trying to dissect what is really going on in this market to guide our trading activity for today, I was able to connect a series of higher lows to give us an ascending trend line to work with for today. Now, with the situation right now, this ascending trend line will be our yardstick for today. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable buying the USDJPY. But something interesting is going on in this market right now, as you will see that since the early hours of today, we have begun to notice some selling pressure as soon as price action got into the 142.850 zone. And this has led into a situation where price action is caught confined within that range that you see here. So what this simply means is that there is a level of indecision going on in the market right now as we gradually approach the macroeconomic event coming up later in the day. So because of this situation, we of course indeed want to move our stop losses to secure this current position, and anywhere right below the 142.500, and of course the ascending trend line will be an area to lock in some profit at this point. So let's ensure we secure all positions right now, and we look out for more opportunities if price action breaks out of the 142.850 level. But if price action drops below both the ascending trend line and the 142.500, we shall have no choice than to get ready to sell. Now, one thing I want us to take note here is that we are not jumping into a sell position right away, as we will need confirmations to happen. So once the breakdown of the trend line happens, we scale down into our lower time frame to look out for retest of structure to join the bearish move. So this is how we are going to be managing our positions for today. So I hope that we be on standby to catch any potential opportunity at this point in time. So it has been a wonderful moment with us here today. I hope we were able to gain one or two things from what we discussed here today. And in fact, if you have found this content helpful and useful in making your independent trading decision, please support the project by clicking on the like button. Your likes are very valuable to me, and in fact, it helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial and helpful to them. Thank you in advance as you do so. I really do appreciate your support as you click on that like button. Thank you very much, and I look forward to seeing you in the comment section on the XAUUSD live monitoring window, which will be coming up 15 minutes before the New York session begins. So I will be sharing the link to the XAUUSD live monitoring window on my Telegram platform. And if you haven't, follow me on this channel so that you can get a notification when we come on live 15 minutes before the New York session begins. Thank you in advance, and I wish you a wonderful day. And thank you for all those who showed concern regarding my health. I really appreciate your support. Do have a wonderful day, everyone. Bye-bye.
jẹ́ kó ní ẹni mo pè é sí ìgbọ́n ìgbọ́n tí ibi tó fẹ́ wò tó wọlé lórí tó fẹ́ gbọ́dọ̀ o kọjú ẹ̀ mọ́ kí ni o kọjú ẹ̀ mọ́ tó lọ sí owó tí